Hey everyone, welcome back to Corporate Dakota, the place where we unravel the mysteries of corporate filings. And today we're diving into the very detailed prospectus and statement of additional information for the Calamos Aksia Hedged Strategies Fund. You know, some funds try to be simple. This one, however, is about as complex as a gourmet meal prepared by a quantum physicist. We're going to break down who's running the show, the potential risks, and what these numbers really mean for investors. And before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below so you can connect with other finance enthusiasts. We're going to break down who's running the show, the potential risks, and what these numbers really mean for investors. And before we start, if you appreciate getting straight insights from corporate documents, make sure you subscribed. We also have a Discord community linked in the description below so you can connect with other finance enthusiasts. All right, let's get into it. This filing is essentially the birth certificate and rule book for a new investment fund, the Calamos Aksia Hedged Strategies Fund. It's a closed-end interval fund, which means it's not traded on a stock exchange like most investments. Instead, it offers shares continuously and then repurchases them quarterly on a limited basis. Think of it like a private club where you can get in, but getting out is a bit more structured. How the fund is managed by two main players, Calamos Advisors LLC as the investment advisor and Aksia LLC as the sub-advisor. They are essentially the captains steering this ship. The fund's main goal is to chase long-term growth while keeping a low sensitivity to the ups and downs of the stock market. How do they plan to do this, you ask? By investing primarily in other investment funds, often called hedge funds managed by third parties. The idea is to spread the risk and tap into various alternative investment strategies. Now let's talk about the money. This table shows the fees and expenses, and folks, these aren't small numbers. For Class A shares, the total annual expenses after reimbursement are estimated at 17.25%, and for Class C shares, it's 18.05%, and for Class C shares, it's 18.0%. This means that a huge part of your investment is going to pay fees to the underlying hedge funds the fund invests in. Remember that Warren Buffett quote, "Risk comes from not knowing what you're doing." Well, in this case, it looks like a big part of the risk is in the complexity of the fees themselves, and for freeing 50%, this means that a huge part of your investment is going to pay fees to the underlying hedge funds the fund invests in. Remember that Warren Buffett quote, "Risk comes from not knowing what you're doing." Well, in this case, it looks like a big part of the risk is in the complexity of the fees themselves. For Class A shares, there's a maximum sales load of 2.25%. That means for every $100 you invest up front, 225 cents is gone right away. If you're buying $1,000 worth of shares, that's 2,255 is shaved off the top before your money even starts working for you. For Class C shares, there's a contingent deferred sales charge of 1% if you sell within the first year. This is a way to discourage short-term traders. The footnotes help explain this better. For Class C shareholders, if you redeem shares within the first 12 months, you'll have to pay a contingent deferred sales charge. This is like a penalty for leaving the game too early. For Class A shares, you might pay a sales load of up to 25%, but the company says the distributor can waive all or part of it for certain investors. Always check if you qualify for those waivers. This acquired fund fees and expenses number at 15.50% is really the star of the show here in terms of expense. It means the fund is essentially a fund of funds. You are paying fees to Calamos Aksia and then again to the underlying hedge funds they select. Think of it like paying a general contractor and then also paying each individual subcontractor directly for the same services. This is a major point of consideration for any investor. Looking at the predecessor fund's investments as of December 2024, we see that the partnership had invested a total of over $53 million in investment funds. The vast majority of this 99.12% was in hedge funds across various strategies like event-driven long-short equity, multi-strategy, relative value, and tactical trading. This confirms their strategy of investing in other funds is indeed the core of their operation. The predecessor fund, which is essentially the precursor to this new fund, had a total return of 6.77% in its initial period from June 2024 to December 2024. That's after accounting for management fees waived by the general partner and other expenses that were reimbursed. On the surface, that sounds decent, but when you compare it to the overall expenses, the true net return to investors is going to be significantly lower. Remember that the investment management fee alone is 1.110%, and that's before all the other fees. For its initial period, the predecessor fund reported a net investment loss of $3,362. This shows that even with fee waivers in place, the fund's core operations were not generating enough income to cover expenses. The gains came entirely from changes in the value of the investments themselves, not from the income generated. Now let's talk risks. This document is packed with them, and it's important to understand these. They list market risk as a primary concern, meaning the value of your investment can go down due to general market declines, even if the fund's individual holdings perform well. Then there's the risk of shares not listed and no market for shares. This means you can't just sell your shares on an exchange whenever you want. The fund is an interval fund which offers limited liquidity. If you need access to your money quickly, this fund might not be the right fit. They also highlight valuation risk because the fund invests in other hedge funds and private investments. Getting an accurate value can be tricky. They often rely on the valuations provided by the underlying managers. This introduces a layer of uncertainty and potential for manipulation. The risks associated with alternative funds are extensively detailed. One of the most significant is the multiple levels of fees and expenses. As they put it, you bear fees to Calamos Aksia plus indirectly the fees of the hedge funds. This is a common theme and a major red flag for investors looking for cost efficiency. The performance-based fees charged by some underlying managers can also incentivize riskier behavior, which is always a point to watch. Looking at the leadership, the board of trustees includes some seasoned individuals. John S. Kudunis is the chairman and CEO of Calamos Asset Management and previously held senior roles at Mizuho Securities. Jim Voss, the CEO of Aksia, has decades of experience in alternative investments. These are experienced people at the helm, which is reassuring but doesn't negate the inherent risks of the fund's strategy. Their strategy under investment objective opportunities and strategies is to primarily invest in alternative funds that employ a variety of strategies like relative value, multi-strategy, tactical trading, event-driven and long-short equity. They aim to invest at least 80% of their net assets this way. This diversification through other funds is the core of their approach. The financial highlights section for the predecessor fund shows a total return of 6.77%. However, after accounting for operating expenses that were not reimbursed, the net total expenses are still a significant number. It's crucial to remember that the predecessor fund operated under different rules than this new registered fund, so past performance isn't a direct guarantee. Let's revisit those expenses. The total annual fund expenses look high, but the legend clarifies they are after expense reimbursement. This means the advisors are covering some costs initially. However, the acquired fund fees and expenses at 15-50% are a massive component, and it's important to understand how that affects the overall return. From a tax perspective, being treated as a regulated investment company, or REIT, means the fund generally won't pay corporate taxes if it distributes at least 90% of its income to shareholders. However, they do mention a 4% federal excise tax on certain undistributed amounts, which is something to watch. The complex nature of hedge fund income can also impact how distributions are taxed for shareholders. The fund has delegated proxy voting to Calamos advisors. They generally follow management's recommendations, but review certain proposals like mergers and shareholder rights plans on a case-by-case basis. They use Glass Lewis, a third-party research service. It's good they have a process, but the ultimate goal is always voting in the best interest of the clients. As of August 2025, only Class I shares had one record holder, the advisor Calamos Advisors LLC. This means the fund is just starting its journey and the other share classes are yet to be significantly distributed. So what's the story here? Calamos Aksia Hedged Strategies Fund is aiming for complex diversification by investing in other hedge funds. The leadership team is experienced and the fund has a clear strategy outlines. However, the expense structure is undeniably high, especially the acquired fund fees, which are a significant drag on potential returns. The limited liquidity of an interval fund structure also means investors need to be committed for the long haul. The risks are clearly laid out, from market volatility to the complexities of valuation and fees. It's a fund for investors who understand and can tolerate these risks and are comfortable with the multi-layered fee structure. Alright, that's our breakdown of this very extensive filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.